For what, the last 20 years, there's been one big question in global economics. When will China overtake the US? Notice I said when, not if. It was pretty much a given. But what if I told you that entire story, the biggest economic narrative of our lifetime, has been completely flipped on its head?
Right, let's just jump straight into it. Because for the first time in a very long time, serious economists are asking this very question. The whole idea that China's rise was this unstoppable force of nature, well, that's been shattered by a really surprising, pretty dramatic reversal. We're going to look at the exact data that's making everyone rethink this and, figure out what it means for all of us.
So, this chart right here, this is why we're even having this conversation. For 2 solid decades, this bar only moved in one direction, up, up, up. Back in 2021, China's economy peaked at 76% of the size of the US economy. I mean, the gap was closing, and it was closing fast. But then, the trend just snapped. It dropped to 70% in 2022, and then fell again to less than 66% in 2023. In a race this close, that's like the lead runner suddenly tripping and falling 10 steps behind. The big question is, what on earth happened?
To really get what's going on, we have to rewind back to the pandemic. Because while most of the world was on one path to recovery, China's journey was, it was totally different. And it's led to something economists are now calling the Great Deceleration.
So as you can see here, most economies had that classic V-shaped recovery, right? A steep drop, but then a really sharp rebound. China, though, got caught in this weird, stuttering W shape. And that second dip, that was driven by the huge Shanghai lockdown in 2022. And it wasn't just some small blip on the radar, it completely broke the economy's momentum, and it left it vulnerable to 2 much bigger underlying threats.
So the first major threat is actually an internal one. Before we even talk about any pressure from the outside, China is fighting a huge battle with itself. It's facing these incredibly powerful economic headwinds that have been building up for years and are now kind of all hitting at the same time.
The best way to understand this internal battle is with this classic economic idea, the middle income trap. It's basically when a country that's been growing super fast just gets stuck. It's not a low-wage country anymore, but it hasn't quite managed to make that big leap to become a high-income, innovation-led economy. So growth just stalls. And if you look closely, China is showing all the classic signs of this right now. And a huge symptom of this is debt. I mean, look at this number. We are talking about a mind-boggling $9 trillion in hidden, off-the-books debt held by local governments. They did this through what's called shadow banking, basically borrowing money on the side to pay for all these massive infrastructure projects. Now sure, this fueled growth for years, but now it's a massive systemic risk to their entire financial system.
And believe me, it goes way beyond just local government debt. The very foundation of China's growth model has started to show some really serious cracks. Their real estate market, which used to be the engine of the whole economy, ballooned into a $52 trillion bubble that is now bursting. That directly fuels the youth unemployment crisis since construction has stalled. And of course, it creates deflationary pressure because prices are falling. All of this has just crushed confidence, with corporate profits now at their lowest point since the 2009 financial crisis.
This quote really brings the human side of all those statistics to life. When people lose faith in the system, they just stop spending. They stop investing. And in China, where buying property was always seen as the safest bet you could make, that confidence has just vanished. The whole engine of domestic demand has basically stalled out.
And underneath all of these economic problems is this slow-motion crisis that's even harder to fix: demographics. You can see it right here. China's population has officially peaked, and it's now starting to shrink. And at the exact same time, the US population is expected to keep on growing. This isn't just a headwind, it's like a fundamental speed limit on long-term growth. And it's one area where the US has a clear, built-in advantage.
So China's dealing with a perfect storm of internal issues, but that is only half of the story. The second massive trap it's walking into is this immense, targeted pressure coming from the outside, specifically from its #1 rival.
Some analysts call this the economic Thucydides trap. It's a fancy term for a simple idea. The world's current dominant power will pretty much always try to slow down a rising challenger. And for the past few years, that's exactly what the United States has been doing, with a laser focus on one absolutely critical area: technology.
And as this timeline makes crystal clear, this is not a partisan US strategy. It started under Trump, and it is seriously ramped up under Biden. The goal is obvious: stop China from getting its hands on high-end semiconductors and the tools you need to make them. These aren't just little slaps on the wrist. These are major restrictions designed to basically kneecap China's tech ambitions.
Now, publicly, the US says this is all about de-risking. A targeted move to make supply chains more secure, not to hold China back. But Beijing sees it very, very differently. To them, this is just a thinly veiled attempt at decoupling, a deliberate plan to cut China out of the global tech world and stop its rise. This fundamental disagreement just shows you how deep the strategic mistrust really runs between them.
So when you put it all together, these powerful problems at home, plus this intense pressure from abroad, the old assumptions about China's inevitable rise, they just don't work anymore. The world's top economic forecasters have all been forced to go back to the drawing board, and their new predictions are pretty stunning.
And I mean, the results are incredible. Just look at this table. Goldman Sachs, who used to say the crossover would happen around 2030, has now pushed that back to 2035. Bloomberg Economics made an even bigger shift, from the early 2030s all the way to the mid-2040s. And some analysts are even suggesting it might not happen until the 2060s, and that's a big if it happens at all. We're talking about a delay of decades. This is a complete rewrite of the future we all thought was coming.
This huge shift isn't just some abstract story about two superpowers. This rivalry is actively changing the entire global landscape, and what that means for the rest of the world is profound.
Think about it. For decades, the world basically made one big bet: that China would be the main engine of global growth. Companies built their entire supply chains around China. Countries built their export plans around selling to China. But now that engine is sputtering, and the two biggest players in this whole interconnected system are actively pulling away from each other. And sure, that creates a lot of risk, but it also creates a vacuum.
And that leaves us with the final and most critical question of all. With these two giants pulling apart, the race is officially on to become the world's next great manufacturing hub. The question isn't just about when China might overtake the US anymore. It's about who is going to step up and fill that massive space that's opening up between them. Answering that question is going to define the global economy for the next generation.